Welcome to TradeTheMBI.com. This is John. This report is for the 17th. Well, we talked about this ABM green line here and the significance of the slight break below it, and then the return back above. And that, anytime you pivot back above that, the fact that we maintained excellent readings here from the extreme, we never dipped below the red line, which suggested that we had to break down further. We had significant weakness, but what we've seen is just this continuation of short-term buyers allows us to get this kind of push back up. It doesn't mean that we're still not in a weak configuration. We actually improved dramatically because the big question for us was, was the orange going to make a new dive? And what we've got is that complete dip of the orange below the red line, just about to have the green line, and we have at the same time steel crossing cyan, which tends to be a positive one. Just there, like here where it crosses below, tended to be the weak period, which was a brief period, but needless to say, it was still weak within that. And now, potential for breaking into a new zone and turn around with the red. Not bad. And all we are is exactly where we've been for quite some time. So we haven't really moved from the range. We're still trying to push towards that 26. None of that's changed at this particular point. You can see NASDAQ right at the exact same level. The NASDAQ's always performed better here because we never went to a negative shakeout and we turned around here, and it usually leads to a nice little run. Plus you get the same orange below. So all the triggers that we look for. Euro maintaining its solid strength, and that definitely is a support to the S&P, and it was that precursor move right there that really bolstered it as well, because that just adds to the values. Yeah, this is still artificially elevated. The fact that we're now making potentially lower shakeouts, the minute you get a lower one here, we're going to complete reset for a buy, but the dip below the red line suggests that we're probably not going to see a huge push from this one unless it continues to break. I mean, you can see it moving into a new zone, so could be enough to sustain it. We'll have to see. I think that if we make a lower shakeout, though, that we're likely to come back all the way down to these previous lows there. There's still this dramatic belief that there won't be any rate increases, and inflation will, not pop up, and it's an interesting one. I don't know that I agree with it yet, but we'll just go with where the money is going. And right now, there's just a ton of fear about the market. But the reality is, the longer they stay out of the market and the market continues to hold or rise, that's only going to fuel it further towards the end of the year, because they're going to be caught needing to make up for lack of performance. So oil on its retrace, you can see that it got an extreme all the way back up here, started to fade off. It could be not quite in a mode that it's going to give us a new bicep. That orange is way too high still. But the key is really right along that ABM green. And I think even at this elevated area, I'm not even worried about oil at this particular point, because this still indicates that we've got substantial growth built into this setup right here, unless we dropped all the way back down into these previous lows. I think some people are suggesting that there's turmoil in Saudi Arabia, and I don't think that has anything to do with what's happening with oil prices. I think it's really just about the economics of demand, and that's all about growth. And gold still stuck in that thing. We talked about this was going to be holding in this pattern for a little while. It's got the potential for a little bit of a breakout here. If that orange can dip just a little bit further and we move into a new zone, we might finally see the beginnings of a significant move. And I think as soon as you start to see oil move, you'll see TLT drop bonds. But this is how it looked from early on. We ended up with the primary early signal. It was right about over here, where we had that 6 and 7. Secondary one, once we got over the 50% mark, and there was nothing else to do but just to watch it go. It was kind of boring in that sense. It wasn't until we got to peak up here that we broke below ABM gold right there, and that started to happen on lower shakeout readings. We finally dipped below the plus 15 up here on the shakeout, which usually starts, and that's where, when you look at that move, and then you ended up with the DOC spread of the cyan, that was right about here. The price was still holding up. And then all we got was just a 50% retrace, and that was just the rise of the lows. Actually, it does still call for it to pull itself to the low, so we'll see if those lows continue to rise. It'll just mean a higher level, but wouldn't be uncommon to have pull back into those ranges either way, simply because of the positive extremes. So all in all, good finish to the week, and we're pretty much right where we were. So, but the movement intraday, like we talked about, that volatility is starting to rise, which is a really nice thing. So enjoy it. As always, though, trade well. We'll talk to you later.